Hey, it's Tuesday. Looks like the banking crisis has been resolved if financial markets are to be believed. First Citizen Bank took over Silicon Valley yesterday. Looks like they got it at a rock bottom price because First Citizen share price absolutely rocked it. Looks like there is huge relief in the market. Gold sank as part of that relief process. I don't believe it, but it looks like the whole financial crisis is now over. I think more cracks will appear down the line, but for today, let's have a look at some financial markets. Forex markets are tricky. Well, the whole market's very, very volatile. Not easy to read for obvious reasons. We're now pulled between higher rates due to this inflation issue that we still have ongoing. UK inflation numbers were released last week and they were very strong. And then, of course, we've got the banking crisis, which is pulling yields back down. It really is two different forces at play there. So markets are volatile, choppy. Looking at the New Zealand dollar, we have a small recovery in a mostly sideways trending market, but longer term, this market is trending down. So I think we will probably break lower, and there are signs of it at the moment. We do have support around 62.00, 61.90, but a break below 61.80 for me would be the sell signal for today. Aussie yen broke my big support level of the week, so pressure remains to the downside. We've had a decent bounce back to my resistance level around 87.55, 87.75. You can see why fib level 50 period moving average on the 4-hour chart descending to keep a lid on prices. And we've also got price action around that 87.60 area, which is lending weight to that resistance level. And we certainly did turn around from there yesterday. Even better than that was my short at 131.50, 131.70 in the US dollar versus the Japanese yen. As you know, we're in a bear trend there, and I'm looking for this to continue. So a high right bang on the resistance level. You can see why. Confluence of Fibonacci levels, previous swing lows, swing high from last week, 200 period moving average. Lots of reasons to be selling the dollar yen at that level, and it's worked beautifully. Seeing some decent yen strength across the board, as you can see here as well, from the New Zealand dollar versus the Japanese yen. Again, sell level working really nicely. Hit the resistance, the 23.6% fib, just holding below the trend line, 100 period moving average on the hourly chart, and down we go. Trying to look at more pairs for my subscribers. We've got the GBP Aussie dollar. We're in a bull trend, as you can see from the hourly chart, in the short term at least. Now we've got really strong support level around the 83.20, 183.00 area. You can see why we've got Fibonacci levels there. We've got previous swing highs. We've got a really nice trend line. We've got the 200 period moving average. There's a lot going on at 183.20, 183.00. If we dip that far from where I'm talking to you now, we would have to see another 100 pip pullback. It's certainly possible. We are very overbought on the 4-hour chart and in need of a correction, so I wouldn't be surprised to see a 100 pip drop. I'm not suggesting a short position. I would sit back and wait, see if we drop back in the bull trend, hit the support level for the buying opportunity. Euro versus the New Zealand dollar, we have got some support around the 173.10 area. It's just a fib support level combined with previous swing highs and lows. So the price action there sort of helping me to believe that that should be a good support level. If we break lower, we've got better support just above the 172.00 area with a nice trend line there, a lending weight to the fib level. By the time we get to the 200 period moving average on the 4-hour chart, should also be helping to add support to that area. The euro versus the Aussie, I wouldn't say this is a topping pattern, but you can see that we can't get through the 162.50 area. I'm not sure why I can't see from the longer term charts any particular resistance area, but on the short term chart, on the hourly chart, we are breaking down. In fact, we're moving below the blue 100 hourly moving average. You can see that trend line. We're also breaking below there. I could argue that that's an ascending triangle, and we've broken the lower trend line now. We could fall as far as 160.30, 160.10. That would be a very strong support level if we fall that far, but we are going to have to drop about 150 pips to get there. So that's something I probably need to look at later on in the week. Now, gold has been declining. As I said, it's a risk on type of scenario now that it appears, for the short term at least, that the banking crisis is over. So profit taking in gold, it started to sink. Silver's been holding up much better, although silver didn't rocket as far as gold did during that crisis over the last 2 weeks. Now, silver, we have a potential. I say potential. We haven't got any confirmation yet, but I'm just wondering if we have a head and shoulders pattern here in silver. We have a neckline around the 23.00, 22.90 area. So a break below there would confirm that the head and shoulders pattern has completed. That's one to keep an eye on as well. Okay, good luck if you're trading today. We'll chat again later in the week.